Hello, viewers. You are welcome to my channel. If you are new, please do well to subscribe, hit the like button, share my video. Today's topic, I'm going to be teaching us what it means to use our stop loss correctly. Stop loss help us to minimize our risk. Okay, it act as a gatekeeper, to protect our assets while we trade. All right. A lot of people are struggling uh, with the actual pips they need to give when they are to set their stop loss. Now, I will tell us the fact. If you are a professional trader or you are just a beginner, please listen to me. It's a very simple thing. One thing you must learn to do is to trade from a resistance level, for example, here, or a support level like this place. Anytime you want to enter, you want to place a trade, a point like this, which is a resistance level, or at the down part, which is a support level. If you are to go long, that means you want to buy, you wait for price to get to this place. As long as it gives you information, you place your trade. All right? Then you enter from here. That will enable you really uh, minimize your risk, knowing where you should put your stop loss appropriately. It's very simple. One moment I will show us, and there's a tool you need to use. All right, that tool is simply called ATR. All right, the ATR is what will help you to really know where to put your stop loss. I tell you guys, when after this teaching, you won't have to struggle again as to where you are supposed to put your stop loss. All right. But the problem most people have, or most people struggled with, is you cannot just come and enter a trade in the middle of nowhere. Don't do that. If you are not sitting in front of your chart, and when you open your system, you now discover that price has rallied a little higher or a little downward, all you need to do is wait for price to come to you, wait for price to get to a resistance level or a support level. From there, you can join, you know, the trade. All right. So there's what we call ATR. The ATR is what we call average true range. I repeat, ATR is what we call average true range. And what does average true range represent? All right. Is what we call, it represents volatility. That is, it measures volatility of price action in a period. All right, like currency pair. Me personally, I trade Euro USD. If you've been watching my chart, you will know I trade EU. All right, EU is what we call Euro USD pair. That I know at the back of my palm. I know how it moves. I know everything about it. I'm not saying 100%, but at least I know when he wants to, make a very strong deep pullback. All those things, because I've been back testing it, I've been testing it, so I stick to it. It's not as if I don't trade other pairs, but this is my favorite pair. All right. Any pair can be your favorite, but I tell you, don't trade so many pairs. I tell you, stick to one or two. then master those two, then you see that you'll be successful in your trading, as you progress. So the average true range helps traders to understand how much an asset typically moves in a given period. All right. In a whole day, how do you know the ATR, the movement of price? How do you know, at least averagely, is the ATR that determines that? And now, let's say, for example, you want to um, um, do a test on your own. So there are three things price does. We have the high, we have the low, and we have the close. I repeat, price action, if you check your chart, we have what we call the high of the day, we have the low of the day, then we have the close of the day, the close price. All right. So all those things, when you want to now measure, when you now want to calculate the ATR, you now what? You subtract the low from the high, you get the ATR. All right, the average true range. That is the average true range. We how price moves from one point to the other. All right. Now I will show you a tool that you will use so you don't have to start calculating, doing mathematics. Like some people, they hate figures. So you don't need to even do all that. I'm just telling you for you to be aware this is how it's being calculated. You just subtract the low from the high, you get the ATR. All right. Now, when you want to place a trade, okay, you first of all determine your entry. All right. Once you did, let's say for example, you want to go short. All right. You want to go short. That means you want to sell. All right. You know, it's okay. There's price here. Sorry, one moment. You know, it's okay. The price action is here. All right. You want to go short. As soon as price gets to this place, it's when it's retracing, you pull out your fib. You already know what the Fibonacci retracement tool is all about. All right. So if you don't know, if you're watching this video for the first time, please go and dig out. There's a video in my channel that talks about that. That's how that I have already treated this, how to use Fibonacci tool, replacement and retracement tool. So you just take, now you want to go short and price gets to this place. By the time you start retracement, you just take your fib from the swing high to the swing low. All right. The swing low, you put your 0.0% at the swing low. Now you wait for price to get to this level. Anything from 50%, 61.8, 78.6. These are what? A retracement level where price will found a resistance, then it will resume underlying trend. So after you have done this, now you wait for price at least to get to 50%. Let's now use 50% as an example. Now, if I ask you what is the price at this 50%, you will see that price is at what? 1.10128. Am I correct? 1.10128. If you even look at this Fibonacci retracement tool at 50%, there is always price here. If you don't want to go look at this your right hand side here, look at this where there is 50%. All right, 50% retracement. Look at it, we have 1.10128. Assuming that is where you want to enter this trade now. So all you need to do is bring out your calculator. All right, this is my calculator. I hope you guys can see it. Bring out your calculator. Now, this is how to plan your entry. All right, it's very simple. You don't need to struggle with it. This is how to plan your entry. As soon as price is coming to this area, this point of interest where you want to place your entry, all right, you now say, okay, you bring out your calculator, all right. If you don't have calculator, just go to search and type calculator, you see it on your system. Or if you have this, the one that you go buy, you just put it on your desk. All you need to do is first, because you want to go short, all right? Because you want to go short, you want to sell, price is bearish. What you need to do is you say, okay, this is 1.10, all right? 128. Guys, look at it. It's not a magic. This is where you want to place your entry. You are waiting for price to get to this point where you now want to enter. All right. Or if you want to enter from 61.8%, if you see the price has already gotten to this place and you want to enter from here, this is where you want to place your entry, guys. As simple as that. This level, there is a price here. And what is the price at 61.8? This is 1.10136, right? Now, you have done that, okay? Once now, this is the price I took, 1.10128. This is what is written on my calculator. Now, how do you get that tool that will tell you the average true range of what is going on now? You just remove your calculator, come to this point, all right, click here and type, you have indicators, metrics, and strategies. You come here, there's a search button here. You just say ATR, all right? This is ATR. Now, this is ATR is what? Average true rate. Click on it, all right? Then press the X button. When you come down here, this is the ATR. 0.00037. This is the price movement. This is the ATR. All right? This is the ATR. Remember, I said the ATR, it helps traders to understand how much an asset typically moves in a given period. In every given period of a time, this is how price moves. This is the range. All right, now that we have seen the ATR is 0.00037. Now bring out your fee, your calculator, because you are going short, you will now add it. You know, the 1.1000128 plus, all right, plus 0.00030 here, then 37. You just say equals this. Now is this number here now happens to be where you place your stop loss. It's very simple, guys. Where are you going to place your stop loss? It's 1.10165. That is where you place your stop loss. Okay, now 1.10165, guys. Where is 1.10165, guys? Look at it. This is where you put your, let me put this thing here, C5. This point here, we can see it. 1.10165. This is where you put your stop loss. It's very simple. Let me now, then you now come and bring out your, this thing and put it here like this, up. Then your target, as I've already taught us, your target will always be where negative 27 or negative 61.8. Bring it down here. And one thing I will urge you guys, please, when you want to set your target, don't always put it at that same level, at least go give it a little space. Sometimes price gets to that place, it will stop shy. It will not get to that point exactly. It will just leave a space. So to be on safe side, I will always tell people, don't just put it on at that particular point. At least give it a little space like this. All right. Sometimes we need to use our number six. Now, what you have just done is you have just used this plot. Now, what is your, if I ask now, what is your stop loss? Just 3.7 pips. But where is it? Above this structure. This very one here is above this very structure because here, this is a strong high. Why is it a strong high? It's a strong high because it broke this structure down. All right. If it is a weak low, this one here, if it is a weak low, meaning that if it's a weak high, meaning that it failed to break a structure. Once a high fails to break a structure down, we refer to it as a weak high. Now, that weak high, what will happen? Price will rally back and take it out before it resume the underlying trend. All right. So now what you have done, this is your stop loss. Very safe. Now, here is your entry. Where is your target? This is your target point, negative 61.8. And what did price do? When price got to this point, 56%, it went up a little, you know, he almost touched 78.6, but what happened? He found a resistance and you see a rejection, but he actually closed below 61.8. Guys, these are the level where price normally turn. 78.6. If it goes deeper above this place, above 76.6, and it now gets to 100%, that is a very deeper retracement, meaning that once price is turning back, it will not break structure down. Guys, I tell you, if you trade like this, if you won't even have stress. All right. If it's a deeper retracement, it will get to 78.6 or it breaks above it a little. All right. Now, if it now gets to 100%, all right, meaning that it will take out this strong high. And once this high is taken, as it's rallying down again, it will not break structure down again. All right. It will stop shy, meaning that the trend is about to change to become bullish instead of bearish. So it's a simple thing, guys. You will understand. You place your stop loss, your ATR here, calculate it. This is your entry, your take profit, right? Now, when you want to go bullish, all you need to do, as simple as this one, as I've showed us, you just put your fib like this up, all right? One moment. Put your fib up, all right? And wait for a retracement. All right. Once you wait for a retracement to come, you now say, okay, this is 50%. All right. And there's a price here for 50%. Punch in that price into your calculator. Then the average true rate, you subtract it. When you are going bullish, you subtract the average true rate from your entry. You get your stop loss. All right. If you are bearish, you add to your entry, you get your stop loss. Remember, the next resistance level or negative 27.0 or negative 61.8 is your take profit target. Guys, Thank you so much for watching this video. This strategy, check it out and you'll see it works marvelously well. Thank you. Hit the like button, share this video until I see you again.